If you live in the US, then your favorite breakfast, the trendy avocado and toast, is going to come under threat. If you don't live in the US, then I have the unenviable task of telling you that Donald Trump's tariff-led recession could hurt all of our economies. Let's take a look at what's going on really in 5 quick points. Now, before I start, like, share, subscribe, and of course, share this video with anyone you think might find it useful. I want to start off by pointing out point number 1. There is a wave apparently of panic buying across the US because people are afraid that prices are going to go up. And there's here a very interesting list of products that are going to become more expensive. Top of that list is avocados. 80% of America's avocados come from Mexico. Coffee and tea, which is imported largely from Brazil, Colombia, from Kenya, also some from India. Shoes and apparel, so all basic clothing items and shoe brands will become more expensive. Furniture will become more expensive. Cars and car parts will become more expensive. And the phone that you're using right now, or the device that you're using right now to watch this video, that device is going to become more expensive as well. Remember, the devices are largely made in China and some other parts of Asia. The batteries and all of those, those parts also are made all over the world and not in America. Normally, what causes panic buying? Price rise, the fear of shortages, the fear of stockpiling, it becomes a little cyclical. So people go out and buy because they think it's going to become more expensive and because it's going to run out, and because they're buying it, then it does run out and it does become more expensive. But let's take a look at what has happened since the last we spoke about the tariffs. China has been the first to retaliate with a 32% tariff on US imports, which is a retaliatory tariff on US imports. The Beijing Commerce Ministry has also imposed export controls on 7 rare earth elements that are commonly used for imaging and consumer electronics coming out of China going into the US. So they've sort of clamped down on that export. China will also apparently file a lawsuit with the World Trade Organization against the US, and Beijing has revealed that it plans to add 16 US entities to the export control list. Now, Trump has responded by mocking Beijing and saying that China played it wrong and they've panicked and they cannot sustain such measures. But where is the real fear of recession coming from? JP Morgan Chase that's put out a forecast effectively saying that the firm predicts a GDP contraction under the weight of tariffs, and it also predicts a push in the unemployment rate. This is the forecast that has just come out. Now, according to a Bloomberg report, HSBC has echoed those concerns and said the recession narrative is gaining momentum, and said the risk has already been priced in if the equity market indicator currently reflects a 40% chance of recession by the end of the year. Other institutions that are agreeing: Barclays, Bank of America Global Research, Deutsche Bank, RBC Capital Markets, UBS Global Wealth Management are all warning of a rising risk of recession if the tariffs stay in place. Now remember, with Donald Trump, you don't really know if he's answering his phone right now and negotiating with these countries, and if some of these tariffs are going to be lifted in the weeks to come. But if what we're talking about right now is if it stays the way it is right now, then you're looking down the barrel of a recession. In the meantime, the stock market in America has crashed. And I'm using the word crash here quite conservatively because the Dow went down 5.5% on Friday. The S&P 500 tumbled 6%. The Nasdaq went down 5.8%. So Wall Street had actually assumed that Trump was using tariffs as a tool for negotiation rather than actual policy. That it was politics and not policy, and that he was just, sort of doing a standoff and he would pull back last minute when he got what he wanted. It turns out that that was not the case. If Trump follows through on his prices, on his tariffs, stock prices may need to fall much more than the 10% from their all-time high to reflect the global recession that could follow and what will happen to US companies because of it. Now, what has also happened is the US stock market has wiped out $5 trillion of investor money in that in that period. So according to the Bloomberg dollar spot index, which was 1%, the euro fell 1%, and the British pound has fallen as well. There's another very interesting piece of information that has come out. Crude prices, oil prices have also crashed. Now you'd stop and say, hey, but this should be a good thing, right? Because if oil prices crash, it will cool off inflation and make things better for everybody. But apparently not. Let me tell you first what happened. The Brent futures have fallen about 8%. It's gone down to $64 per barrel, and there's been the OPEC countries, so which are the Gulf countries that actually make petrol, have decided to squeeze the amount of petrol that they're making and make less, so that they can sort of shore up the prices. What this effectively means is that there is an expectation that global demand will come down for fuel. When fuel demand comes down, or there's an expectation that fuel demand comes down, you expect that the global markets or the global economy is going to cool off or to shrink, and that is why that is a bad thing. Now, Goldman Sachs has responded by cutting their expectation on crude as well by $5. The next thing that has happened in point number 6 is that Trump has called on the Fed, the Federal Reserve, which is their RBI, and sort of, I would say, asked to cut rates. But he didn't ask very politely, so maybe ask is not the right word. So he called on the Fed Reserve Chair, Jerome Powell, and to cut rates. And he effectively said, and I'm quoting this, it would be perfect time for Fed Chairman Jerome Powell to cut rates. And he's posted this on his social media. He is always late, but he could now change his image quickly. He basically says, cut interest rates, Jerome, stop playing politics, ! End quote. On the other hand, Jerome Powell, who is sort of their RBI chairman, right? So their Fed chairman has spoken to journalists and said that the Fed is well positioned to wait for greater clarity, and that the tariffs announced were significantly larger than expected. And so the Fed has two main goals, is to promote price stability and maximize employment, so they don't expect a rate cut to happen very soon. Why does Donald Trump want a rate cut? Because when prices go up, automatically there's not enough money in people's hands. So if you cut rates and they're paying lower interest rates, then that eases off a little bit. It makes it easier for businesses to borrow. It makes it easier for people to borrow. There's a little more money in people's hands. But let's take a look and a focus on the word recession, and I would do want to check and see if it's being fairly used here, because we've done this exercise a couple of times in the past, right? So according to the International Monetary Fund, what is a recession? It is a period of declining economic activity. So it is a slightly long downturn, so which means that your GDP is shrinking and it's happening over a period of time. Now, a widely used rule of thumb among analysts is 2 consecutive quarters of decline represents a sort of recession in that country. And according to the IMF, and this I thought was really interesting. So if you remember all of the things that we said would happen if these tariffs stayed, right? Prices would go up and people would not be able to buy because inflation would go up and people would lose their jobs. So if you take a look at the International Monetary Fund's reasons for recession, or what the recession can result in, it says one of the common causes is a sudden spike in prices. When prices go up, then consumer purchasing power comes down. People are not able to buy anything, and that reduces demand. And then, of course, fiscal policies, where the country starts to implement fiscal policies to control inflation. The financial market stability is under threat, so your stock market is actually like not very stable. Households and businesses become over leveraged and struggle to pay back debt, where basically they're taking more and more loans and they are unable to pay it back. So this actually sounds like everything we have just described, which is why most of the analysts who are watching the US market right now are predicting a recession for this year. But here's the point, right? What happens if there is a recession, hypothetically speaking, in the US? What happens to the rest of the world? Well, the US, we must remember, is the world's largest consumer economy. They spend more money than anywhere else in the world, which is why it's a great market for our products, for the rest of the world to sell their products too. So what happens when the US has a recession? It cools off the entire world. So basically, imagine if we were all farmers and we all took our produce to one marketplace and we sold it in that marketplace, and someone shut that marketplace and you have nowhere to take your produce anymore, and then the entire market. It's a very crude example, I know. I was trying to simplify it. So if Americans cut back on spending, then global companies, especially companies in China, Mexico, India, South Asia, will lose major sales. If the US market, stock market continues to tank the way we are seeing, 10% or more than that, that will have triggers to other stock markets that will take cues from the US market, because it is the most important global market that we look at for cues, and that will result in crashes in all of our markets, because global investors will start pulling their money out. This we've already discussed. If the US market demand comes down, the demand for oil prices will come down. This will affect countries that actually export crude oil. We import, so it will be a good thing for us in India. What will also happen is that investors, global investors, will take their money out of the stock markets and move it into the dollar. It will make the dollar more expensive. It will devalue the rupee and other currencies also. And that's a bad thing for us, and that's a bad thing for anyone who does export. And multinational companies which have branches and offices out here will start to cut back on jobs. We've seen this happen before. They will start to actually lay off people, and that's not a good thing for us. Global confidence will take a hit. Businesses will start to be cautious before they invest any money, and that's not a good thing all year round, all world round. So effectively what we're looking at is, if Trump's tariffs continue as he has announced, and there's no rollback in any way, then most analysts predict a recession in the US. If that recession does happen in the US, it's a very bad thing for the American consumer, who has been asked to sort of buck up and hold on, mostly by billionaires who are telling average Americans that they should put themselves through the pain. But that will also mean more pain for the rest of the world. Leave me a comment if you think that Trump is actually playing a Texas standoff and he expects that someone is going to blink and they'll call this whole thing off. Or do you think that this is something he'll actually see through, and what will that mean for the rest of the world in your opinion? Leave me a comment in the comment section.